Well, here we are, yet another week where essentially everything is pumping. Literally everything. Guys, my name is Hamilton, and in the next 5 minutes, we're going to talk about the state of the market. If you haven't already, please like and subscribe for this type of content. Without further ado, let's talk about the absolute graveyard right now that bears are living in. Right? If we look at the number one asset on the week, it's Bitcoin. Bitcoin, up 42% over the last 3 months and up 5% alone right now as we're making this video. Anybody that has been caught short Bitcoin over the last few months, absolutely blown up. I can't believe that people are still trying to fight this trend. This is one of the strongest uptrends year to date. Bitcoin itself up 150-ish%, and some of the assets on the equity side, GPTC, etc., up 200, 300% as well. Look at your Riots, your Maras, all of these things up large and now starting to really catch a bid. Shout out Coin breaking 110 today, a trade that we're inside of TTI. Absolutely fantastic, but copper as well. I mean, essentially everything that we want to be going up on the week has been going up. Bonds, although they are slight down on the week, absolutely incredible week as well, catching a bid. The dollar has come down a lot. That's what's given the fuel needed to go into these stocks, these equities. I mean, just across the board. Across the board, we are seeing positive pops in literally everything that we want. Obviously, today being Friday, the day after Thanksgiving, this is the lowest volume day of the year. So we're not seeing a whole lot of movement today, and it is a short week. But man, what a great continuation over the last month now since the market pivoted on October 27th. October 27th was the absolute low on that corrective phase from July to October. Here we are, halfway through, a little bit more than halfway through November, and in towards that end portion of Q4 where it really starts to catch up, specifically with small caps. You could not ask for a better launch pad. If you've been in positions for the last 2 to 3 weeks, you are absolutely loving this, and there's no reason why you should expect it to stop. So once again, shout out Bitcoin, shout out the growth high beta names this week, absolutely killing it. Let's look really quick at US sectors on the quarter. And we can see right now semiconductors, software leading. That's exactly what we would expect in a bull market. I'm sorry, paint it however you want. I don't really care if you need to cry, bitch, and complain that this isn't what you want to see. I don't really give a shit. If you're too stubborn to go and buy the names of the market that are leading, that's totally okay, but that's your problem. Semiconductors and software leading quarter to date. That's why we are long that in TTI, right? This is from an industry standpoint. If we come back to US sectors, I guarantee you it's going to be tech because semis and software are up there. What's leading? Tech. It shouldn't be a surprise, guys, that the areas of the market that are leading year to date are continuing to lead off of the corrective bounce. That's what you expect in a bull market. Buy the high beta names right now. Tech, communications, consumer discretionary. If you don't, that's okay. Just don't bitch and complain at the end of the year when everything else is absolutely flying. We're going to get through this relatively quickly because let's be honest, I'm going camping. I want to leave. All right. Let's talk really quick about the tweet of the week. It's JC Peretz. Shout out All-Star Charts. He just tweeted this out today, actually this morning. And he goes, let's look at the bull market. Now, JC Peretz is a staunch believer in market breadth, and he said the market bottomed back in July or June of 2022. We tend to think it was October, but either way, it doesn't matter. It was last year when everybody else was shorting new lows. He says, listen, things started to bottom and pivot, and we've been going long since then. Look at the areas of the market that are leading. High beta names, tech, the Qs, communications, consumer discretionary down here, underperforming tech and communications though, but tech has been the big leader. It's semiconductors, it's software names, and to a certain extent, it's internet related names. He's sitting here saying, let's check in on the current bull market. The areas of the market that are defensive in nature are up the least over the last year and a half, which is what you're supposed to see in a bull market. And obviously the offensive areas of the market are up the most. This is what you expect in a bull market, guys, regardless of whether or not you want to admit it. This is the current environment. Long it or stay out, but shorting it is an absolute insanity, all right? Insanity. I want to point out a few things here really quick. I was just talking about how we're in a bull market. We are in a bull market. If you didn't believe me, just go and look. I mean, we're up in the Qs right now, year to date. Just shift click up. We're up almost 50%. You don't want to pretend that that's a bull market. Whatever. Continue to smoke your hopium for those bears in there. But for those of you that live in the real world and not the fantasy world, the Qs here are very close to an all-time high. I'm going to bring this into a line chart really quick, and I want to show you something. The Qs right now, from an absolute standpoint on closing price, within 4% of all-time highs. And the area of the market that you would typically expect to be leading the market into all-time highs, semiconductors. This is the new Dow theory. People are talking about how important semiconductors are in terms of the entire economy. When semiconductors are outperforming, you can reasonably assume the market is going to be outperforming. And here we are, semiconductors hitting all-time highs. So if semiconductors are hitting all-time highs and the Qs are sitting less than 4% away from all-time highs, is it reasonable to expect by the end of the year the Qs are going to be at all-time highs? Yeah, absolutely. As a matter of fact, I can take it one step further. technology in general, all-time high, led by things like Nvidia, led by things like Microsoft. These are all-time highs, guys. This is the time to be looking at flipping bullish. We're coming into the seasonally bullish time of the market. That November, December, January, February 4-month run generally is absolutely nuts. And if you've been following the content, extrapolate it out into the 4th year of an election cycle, specifically with a stand-in president that is looking for re-election. You really think they're going to let a recession come in? You really think they're going to let this market fall before President Biden runs his re-election campaign? You guys are smoking the opium. The bears here are absolutely grabbing at straws. There's virtually nothing, at least from a technical standpoint, to say that this is over, this rally. This should be up near all-time highs by the end of the year. The Qs, at least, SPY's going to be pretty close, I would think. We're obviously positioned bullish. I'm talking my book right now. If you don't like it, that's totally fine. Click the goddamn video off. But for those of us, once again, living in the real world, this is the environment that we're trading in right now. Everything is popping up. And also, breadth is improving. For anybody that sits here and says it's only a couple stocks, excuse me, 52% of the market is now trading above the 200-day moving average, at least things that are listed on the S&P 500, and we can look at the 50-day moving average as well. We're sitting up here at 73. This is a very healthy corrective move off of a previous correction, right, from July to the end of October. This is exactly what we want to see, and this is exactly why we've been able to open longs over the last 3 weeks, and obviously we're up relatively large. A few names that you can look at into next week. Disney missed the initial pop that we wanted inside of TTI, but that's okay. This is a little bit of a high and tight breakout today off of something we call a COD, right? A change of direction trade. This is a power earnings gap or a peg. Get your mind out of the gutter. We expect the lows are in Disney off of this little hook pattern here. It's a liquidity trap, a bear trap into new lows. We do think that the lows are in a Disney. Now it's just where do we actually get it? The exact same setup is present on Target. As you can see, this is a change of direction. For whatever reason, don't care. Don't give a shit about your political opinion. From August 21st all the way until the middle of 2023, end of 2023, Target's down 60%. No real meaningful bounces or anything. And then all of a sudden we get a gap up on a power earnings gap. We expect that Target is also at the lows and is going to lead to the upside. We're going to wait for the 200-day moving average to get involved here, but this is a great setup as well. If you zoom in really quick, this is another high and tight, just like Disney. We expect both of these to resolve to the upside. And the last one we really like here is coin. Coin above 110. We're long coin already, but we want to get more long coin as we take profits on this specific setup. We're looking for a pullback in towards that 110 area. Hopefully we get it. If we do, we want to position ourselves for the next leg up in between 150 and 160 and potentially even that $200 area. There's 3 trade ideas that you can take into the future. This is your markets in focus. I hope you guys enjoyed your Thanksgiving holiday. If you didn't celebrate, that's okay too. At least you had a day off from the markets. Once again, my name is Hamilton. Please like and subscribe this type of content. This one was a little bit quicker, but I'm sure you guys appreciate that because I talk too goddamn fucking much. Leave a comment below and I'll catch you in the next one.